Oh, hi everyone. I hope you're all well. It's Susie again from Esoteric Trading Solutions. I wasn't going to do a YouTube until next year, but someone sent me something, Dan, thank you very much, from the UK, an article that came out, I think it was in Forbes on the 20th of December 2017 by a guy called Kyle Samani about the bear case for Ripple and Bitcoin Futures Edition. And honestly, this guy has got no idea. Seriously, someone like this shouldn't even be writing about markets and the settlement process or financial markets at all in terms of currency or fixed interest or bonds or anything, because you can honestly tell that this guy's never been a trader. He has got no idea about settlement systems or risk management or anything. As I said before, I've worked in markets since 1987. I've traded bonds, global bonds, foreign exchange currencies, equity markets, mortgage-backed securities, repo markets, exchange settlement. I've managed bank exchange settlement accounts in Austria and Vosto. On the settlement side, risk management, you name it, I've done it. And this guy's just got no idea. So I couldn't help myself. I had to actually respond with a YouTube, which I wasn't going to do. But this guy shouldn't have written anything, because honestly, he's confusing so many different elements, and it makes me wild, because people like this think they know something and they actually know jack shit. I got to tell you that. So what? He's an entrepreneur, he's this, he's that, but he has no financial market experience. When I look at his bio, nothing whatsoever. So let's just go through what he did say, and I'll put some light on it. So what? He's published something about someone published this stuff and whatever. They're representing a bearish case on Ripple, and this is the reason why they say this. It's got a network, and then they talk about the banks issuing IOUs and settling debts, which is just it's madness, because they don't. And Ripple has used to pay fees on the Ripple network and a bridge currency. Well, that's a crazy statement as it is. Ripple's fees for any transaction are 0.0004 compared to Bitcoin's of 28 US dollars, compared to Ethereum, which is about $7 or $8, compared to Dash, which is about $5 to $6, and so on. And he's saying it's a bridge currency, that two institutions that don't have a trusted relationship. I mean, that's garbage in itself, because institutions, when they deal with each other, they have credit limits, and they have credit people that actually assess the credit worthiness of an institution to pay back a liability. So if I'm a dealer and I'm dealing with another institution to borrow money or to invest with them money, say money market security or fixed interest or bonds or whatever, I have credit limits that my credit people have ascertained the balance sheet of the institution, and I have limits to how much I can place with another institution, and they'll have the same sorts of limits. Also, I'll have counterparty limits and settlement limits, which my credit people will allow me to invest in. So if I go outside of those limits, say for example I've got a 100 million credit limit with the Bank of America, and I'm, say, JP Morgan, I can invest 100 million with the Bank of America within my limits. If I go outside of those limits, I breach my limits, and I'll get in trouble by the very top of the banking organisation, the CEO. It's not a case of trusted relationship, it's garbage. You have strict limits, strict risk management limits, strict settlement limits, which are basically settling cash, and strict counterparty limits if I'm on the front office dealing desk doing the financial transaction. The same will be if I'm doing a money market security, or if I'm doing foreign exchange, or if I'm doing an interest rate swap, or anything else. The native token, I mean, Ripple's got technology, that's number one. And number two, they have a token called Ripple currency. Now, if the banks use Ripple's technology, they will save 30% in overhead costs because they get rid of middle market completely, middle management. Now what that is, as I said, is credit people that reconcile cash flows, risk management people. It'll be settlements people that have to reconcile cash flows, and it'll be all sorts of settlement limit people that monitor everything. They will take off 30% of their costs just by using Ripple's technology. And let me explain that. If they use their technology to settle instantly, which is what they can do, and they don't even have to use Ripple's currency, they can still use fiat currency for settlement straight away, you don't have this problem of currency not settling straight away. If they use the old system, which is SWIFT, the currency will not settle for 3 or 4 business days because the SWIFT system is antiquated, it's old, it was built in 1973, and it cannot settle immediately. So what that means is a bank will enter into a transaction with another bank because of their credit limits, and they're allowed to do it, but they have settlement risk. In other words, I buy Aussie US, for example, off the Bank of America. I've done the transaction today, but the settlement is not for T+3 or T+5. So, for example, the trade is done today, but it doesn't settle until 3 or 5 business days. So I have settlement risk, and the Bank of America will have settlement risk against me. And my middle office people, which are my risk managers, my credit people, my settlement limit people, will all be marking off that this is a transaction that has not yet settled. And that will come within my risk limits because I've already transacted at the front office level, but the cash flows have not settled. With Ripple, if I use their technology, I don't have this problem. The cash flows settle straight away, whether it's US dollars or Aussie, straight away, if I use their technology. And that's why the banks save 30%, because they don't need the middle office people to monitor everything. And they don't have this outstanding liability or asset that hasn't yet settled within 3 or 5 business days, where either way they have to either fund that asset, they've got a cash flow liability or a cash flow asset, which is going to hit their Nostro account or their Vostro account, which has got to be included in their liabilities or their assets. And that's the thing. The banks will have a Nostro account and a Vostro account where money goes in or goes out, and that's their own accounts, not clients' accounts, the bank's own primary accounts. And those accounts in Australia will feed into the exchange settlement accounts, which will sit with the Reserve Bank of Australia. Those exchange settlement accounts have to be in credit daily by 4:30. If they're not, the banks could literally lose their banking license if they're overdrawn 3 times in a row, because they need to keep those exchange settlement accounts in credit, which is a buffer to a funding problem. Now, this is what happened in 2008. Banks ran out of funding because people pulled their credit limits. When the market was imploding, big banks in America, JP Morgan and the Bank of America, pulled their credit limits on, say, Suncorp Bank, which is a regional bank, because things were so bad. Suncorp couldn't borrow any money from JP Morgan or Bank of America because they were a triple B plus or an A minus. And basically the banks, because the market was imploding and everything was going down and people needed funding, they pulled the limits on all the small banks, and the banks ran out of money. They had to pay back all the money they'd borrowed. And that's why the government came in 2008 to bail Suncorp out, because every big bank out there pulled their limits, their credit limits, which meant they couldn't borrow any money to square off their exchange settlement account. Plus, there was a rumour in the market that Suncorp was going broke, and essentially people started taking their money out of the bank. Now, when people do that, banks have loans on the other side. They've borrowed money from, say, the depositor, You put money in the bank, they borrow it, and they then lend it out on an asset as a loan. And the problem is, as you know, the loans are often 30 years. You pay back a mortgage for 30 years, but the funding is short term. Now, if people pull their funding, Suncorp had to find more money quickly, and if the big banks pull their limits, then essentially they've got no funding source. So this comes back to Ripple. If they use their technology, their funding is immediate. There's no delay, 3 to 5 days in terms of funding. And they also get rid of a middle layer of management, whether it be the risk people, the accountants, the credit people that are checking all the limits and the funding limits. So this guy who wrote this is an idiot, seriously. If they use, on the second thing, if they use Ripple's currency, not just their technology, the banks will also reduce their costs by another 30%. So if they use Ripple's technology and their currency at the same time, they reduce their costs by another 30%. And the reason why they do that, if they use Ripple's currency, is because to transact with Ripple, as I said, it's immediate. They can do 1,500 transactions within 3 or 4 seconds. Might be 5, who gives a stuff. If you do use their currency, their bid offer spreads, buy, sell, just like the crypto market, is basically, literally 0.00004 of a basis point. So it's not even a quarter of a basis point, not even a tenth of a basis point. If I go into the foreign exchange market and I buy Aussie US and I want to sell it back, I buy it and I've got to pay the higher price. Say it's 75, say the bid offer is 75.10. I buy it, say 75.10, I buy it. But if I made a mistake and I wanted to give it back because I actually should have done it the other way around, I have to sell it at 75, and I've already taken a 10 basis point loss. Now, if you do something with Ripple, it's not even 1 basis point, okay, in terms of the currency, because the bid offer spread is so fine that it's so much less than even doing a foreign exchange transaction between, say, me, I'm a NAB dealer in Australia, and I do a transaction with JP Morgan. So as my deal becomes bigger, I do more foreign currency, the trader in JP Morgan will widen that spread. So say, and in my past, say for example, I want to do 500 million. I want to lift him for US yen. I want to buy US yen 500 mil. Normally a bid offer spread on the currency is 3 basis points, but because it can be a big position, or if I wanted to do, say, $1 billion, the guy will widen the spread because he has the risk. I want to buy US yen, $1 billion, say for example. He will show me a bid offer spread anything from 5 to 10 basis points. So say I'm a buyer of US dollars against the yen, he would show me a price of say 112 to maybe 112.15. So I'm the buyer, I pay the higher price, 112.15 against 112. It's cost me on $1 billion 15 basis points, which is a lot. Okay, now in Ripple's case, no matter how big the volume is, I still get charged the same transaction costs. And that's why Ripple to the banks, whether it's the technology or the bid offer spread, is so important because they reduce their bottom line by 60% in terms of costs. Now, if you're running a business and you reduce your bottom line by 60% if you use the currency and the technology, think about the competitive advantage that puts you in. Every other idiot out there is still going to the foreign exchange market and paying 3 to 15 basis points, right, for their transactions on every transactions. And don't forget, the banks can do, it's a $7 trillion market in a day. We're talking huge volumes in the foreign currency market, huge. It's a $5 to $7 trillion market, okay? So if I'm a bank and I take on Ripple's technology and I also use their currency compared to other banks, stupid banks that don't, and I reduce my costs by 60%, I'm effectively adding back 60% to my profit line, which puts me in a competitive advantage with every other bank. Because I'm adding back 60% to my revenue line, I can go out there with competitive deals to pull clients in. So in other words, I can show, say for example, as the bank, with my strategic hat on, I can show a personal loans to clients, say at 5% compared to, Salm ANZ, because I'm using Ripple's technology in their currency, and I've got a huge competitive advantage against NAB, who's not using it. I can show a personal loan at 5%. NAB's still showing their personal loan at 20%. What do you think NAB clients are going to do? All NAB's clients are going to go to ANZ. They're going to refinance out of NAB's personal loan and go to ANZ. And ANZ will literally get their clients. This is the thing with Amex. American Express is using Ripple's technology. Now, their technology, as I said, is real time. It settles within seconds. If American Express also use Ripple's currency to do foreign currency, they also save another 30%. So American Express is now in a competitive advantage, where their bottom line costs are reduced by 60%. All of a sudden, they can now be in a position on their credit cards to show a borrowing rate. If I draw down my credit card, it's only going to cost me 5%. And yet my ANZ or my Visa on my credit card cost me 15% in interest. What do you think I'm going to do as a consumer? I'm going to close my credit card down with the credit card provider that's costing me 15%, and I'm going to go with the cheaper credit card, aren't I? And that's the position that American Express will be in. I have no doubt in my mind that American Express will use Ripple's currency because they save another 30% on the bottom line. And then what else does this guy say? He talks about Ripple Network is permissioned as a direct result of its unique nodaless system, the risk of rational actors spamming the network. Get real. I mean, this is just crap. It's unlikely that JP Morgan would spam Bank of America or South Korea would spam Fidelity. I mean, even if these institutions don't trust each other, the fact is they have credit limits. We're dealing with dealers on a desk that have credit limits, and they do deal with other dealers from other banks. So they have credit limits in place. Their credit team and their management have allowed them to deal with the other institution. Why would anyone spam anyone? What's the point of saying that? This guy's just trying to be smart. I mean, it's friggin' ridiculous. I mean, he shouldn't be. This is absolute garbology. It has no relevance to what this guy's trying to say. He's just trying to make himself look smart, and he's just a dickhead. Honestly. Okay, the next thing he said is the other intended uses for Ripple is to act as a bridge currency. Two financial institutions need to settle IOUs in local currency. God, even the way he words this, IOUs in local currency. How does the debtor acquire the local currency of the creditor? This guy's got no idea. Many currency pairs don't exhibit substantial trading volume. And he picks the Kenyan dollars to South Korean won. Get real. The most traded currencies in the world are US to the yen, of course. Australia is the 5th largest trading currency in the world against the Aussie US. Aussie US, Australia is the 5th largest currency trading in the world. Right? Then you've got the British pound against the US dollar. You've got the euro against the US dollar. I mean, seriously, no one trades Kenyan dollar to South Korean won. This guy is just an idiot, seriously. And the way he just writes it, he clearly has never been in financial markets, honestly. The main currency pairs, which are the G7 currency pairs, which are, the European and American currency pairs, are the most liquid currency pairs in the world. Then he goes on to 180 fear. This is all irrelevant. Absolutely freaking irrelevant. 16,000 currency pairs. Doesn't mean anything if there's no liquidity and no one trades in them. People mainly trade, as I said, in US dollars against the yen. They trade, pound against the US dollar. They trade Aussie against the pound. Aussie against the US dollar. They trade euro against the US dollar. I mean, this guy, what he's saying is just irrelevant. This is unnecessary, and so is this here. It's all gubbology. Absolute crap. When he's getting a bear case for Ripple. This is bullshit. Okay, what else it said? The problem is usually solved by using a market maker which provides liquidity in each currency to the US because US is a global reserve currency. Ripple proposed the financial institution solve this problem using Ripple network and currency instead of legacy banking infrastructure. Again, this guy's mixing up, what's liquidity and what's settlement systems and what people trade and what they don't trade and all that sort of thing. The reality is pound US, US yen, Aussie US are the most liquid markets in the world. But even those markets, as I said, will have a bid offer spread, normally a buy and a sell spread of 3 basis points. Okay? So what if the US is a reserve currency? It doesn't talk about the volatility of the US currency against the yen, which is driven by, obviously, how much the US borrows, for example, which is driven by interest rates, which is driven by their economy. The US dollar is still AAA rated by the Moody's and Standard & Poor's, but the reality is the US has a $21 trillion debt problem. And technically speaking, the US dollar should not have a counterparty credit rating of AAA. Then he goes on to Ripple proposed a financial solve this problem with using Ripple instead of legacy. I mean, honestly, when you do a US dollar trade against yen and you're using the SWIFT system, which was developed in 1973, a very, very old system, as I said, generally I'll do a trade today and the settlement could be T plus 2, T plus 3, or T plus 5 days, right? So which means I do the trade today, it could settle in 2 days, 3 days, or 5. If I do the transaction using Ripple as my my technology, even if I buy US yen, it's going to settle straight away rather than me using SWIFT. Okay. And then he goes, financial problem is okay. Instead of using, oh my God, this guy fed income. He's confusing so many different things here. Liquidity, settlement, bid offer spreads on fiat currency, costs compared to Ripple. I mean, honestly. Okay. Then he goes, Ripple network is superior as payment rail system. A payment rail system? What the hell does that mean? Relative to legacy financial infrastructure. I suppose what he's talking about there is Ripple can settle immediately, whereas the legacy financial infrastructure is SWIFT, which is the settlement system. Okay, the settlement system was developed in 1973 and is unable to settle instantaneously. It just can't do it. Because what it means is you have settlements people in Australia, and you have settlement people whoever I've done the deal with. I'm a dealer in Australia, say working for NAB, and I've done a deal with JP Morgan to buy Aussie dollars against the US dollars. Okay, so JP Morgan gives me Aussie dollars, and I give them US dollars, say in 2 business days. My settlements people have to confirm that trade through SWIFT. And their settlements people have to confirm that trade through SWIFT as well. When I send my US dollars to JP Morgan and they send me my Aussie, my settlements people have to confirm that the trade is right. Their settlement people have to confirm that the rate and the trade is right, that the volumes are right. I've done it at 76 or whatever. And they work out how much Aussie I get and how much US I have to give them. And my settlements people will only release the US dollars when the Aussie is released at the same time. So it involves people that have to be up at the same time to basically confirm these deals. As you can see, the problem, you've got different time zones. So when it's day here, it's night, or morning, you guys are asleep in the US, and vice versa. So that's the biggest issue with foreign currency settlements using SWIFT. It requires real people, and you've got a different time zone. With Ripple, again, you don't need to worry about that because they settle instantly. Now what's he saying? How it doesn't make sense rational finance will voluntarily use Ripple as a reserve currency to settle transactions because Ripple will always be, by definition, less liquid than a global reserve. Oh my God! Than a global reserve such as Bitcoin? You are kidding me. Bitcoin is a cryptocurrency. Bitcoin is not liquid. Liquidity. Bitcoin is a cryptocurrency. One minute he's talking about foreign exchange, and now he's talking about Bitcoin. They're completely different products. Bitcoin is going to do nothing for me if I'm trying to settle foreign currency flows. Nothing. It's got nothing to do with anything. Bitcoin is not a global reserve. It's a digital currency. And that has no liquidity. Again, Bitcoin is a cryptocurrency. If you do a transaction with Bitcoin, it's not instant settlement. It could be three hours to 24 hours because of the miners. This has got nothing to do with foreign currency or settlement. This guy honestly has no idea. Oh, Christ. Honestly, Bitcoin, is not a fiat currency, and it's not a global reserve, and it's not liquid. And then he goes into the US dollar. Yes, the US dollar is the prime currency. But going back, 100 years ago, the pound was the prime currency, and going forward, the US dollar may not be the prime currency. You might get the Chinese renminbi being the prime currency. The US, is rated by the Moody's and by Standard & Poor's, which are American, as AAA. But China has got the US rated CCC, So, the US yen is the most liquid currency pair, sure. Okay, what else has he got here? Oh, Christ, this is frustrating me. So they spoke to a few traditional asset management firms, big deal, commercial banks, investment banks. All of them independently came to the same conclusion. What? They clearly don't understand Ripple's technology and what they can do. If they review what is Ripple network to settle transactions, which they deem unlikely, they would want to use a global reserve currency for settlements, not Ripple. Well, I find that incredibly hard to believe because, seriously, why would you use US yen in volume when it's going to cost you 10 basis points, and it's going to take you 2, 3, or up to 10 working days to get settlement, when you can use a currency like Ripple, which is going to cost you less than a basis point, less than a quarter of a basis points, and you've got instant settlement. And particularly if one of your competitors, one of your other banks is using it, and you as a bank that's a competitor of that bank is not using it. If ANZ is using it and CBA aren't, ANZ strategically can do so much. They can basically get, CBA clients. What does he say now? The global reserve is far more likely to be big. This guy is he's an idiot. Foreign currency and cryptocurrency are completely different. Completely different. And we're talking about Ripple's ability to settle transactions instantly, which Bitcoin Cash can't do, Ethereum can't do it, and Bitcoin can't do it because of the miners. And also their transaction costs are very expensive. Bitcoin now, their transaction costs are $20 and higher. Ethereum was $7 to $8. They cannot instantly transact foreign currency instantly. Completely different. This guy has no idea. Seriously, I'm just getting frustrated now. Again, he says it doesn't make sense that Ripple, the banks are going to use it. Well, I've got news for you, buddy. The Federal Reserve and the Bank of England have been testing Ripple. And if the Federal Reserve and the Bank of England are happy with Ripple's technology and they could potentially use the currency, what do you think that says? I mean, that's what they've been doing, right? And you're a dickhead, because Ripple also, there's basically 61 Japanese banks that are testing Ripple's technology and are going to use their currency by the end of January. You just have no idea. Bitcoin and Ethereum are not foreign currency, and they do not have instant settlement. Then he goes on to say the instant between currency pairs is enormous. Of course they are. No one trades, the Kenyan friggin' dollar against, the Korean won. It's about flows, about trade flows. Does Kenya trade with Korea? No. Do they have a viable government? No. Is there, political unrest? Yes. Is their economy imploding? Yes. It's almost like saying no one trades the Zimbabwe dollar against the US, because Mugabe has absolutely stuffed up the economy when he threw all the white people off the farms. I mean, get real. This guy's an idiot. Of course there's enormous liquidity discrepancies in currency pairs. Big deal. It's got nothing to do with Ripple's technology, where they can settle instantly, and nothing to do with the cost of Ripple's currency, which is 0.00004, not even a tenth of a basis point. If I do, as I said before, if I do a foreign currency trade, my minimum is going to be 3 basis points. If it's a big trade, it could be up to 10 or 15. This guy's got no idea. And Bitcoin and cash and Ethereum are not foreign currency. They're a different asset market completely. Oh, God. I mean, this is just absolute garbology. Seriously. This guy is comparing two different things here. Just feeding him. I can't even... It's frustrating me too much here. It's frustrating me. Bitcoin cannot do instant settlement. He's just losing the whole point here. Settlement is different to liquidity completely. The banks cannot use Bitcoin because they cannot instantly settle and in volume. The most transactions that Bitcoin can do, transactions per second, if you're lucky, is 4 to 5, if you're lucky, if the miners allow them to do those transactions. Ripple can do 1,500 and settle instantly. Bitcoin cannot do that. It could take 3 hours to 24 hours, and the costs are astronomical. And again, liquidity is not the same as settlement. And again, Bitcoin, cryptocurrency, is not the same as foreign currency. Oh man, this is driving me crazy. Okay, let's go to the next page here. Seriously, I can't stand this. An idiot. Oh, God. Now, he says, Ripple are aware of the problem. They recently launched a liquidity program, 2/3 of Ripple supply. Oh, God. Valuation has got nothing to do with liquidity. They're deliberately discounting their service at a significant rate to entice their customers to use Ripple rather than Bitcoin. Get real? Even if Bitcoin was for nothing, banks wouldn't use Bitcoin because they don't have the ability to settle instantly, and they cannot do 1,500 transactions per second. This is artificial liquidity. I mean, this is garbology. Absolute garbology. The reality is, Ripple can transact so quickly, they don't have outstanding, asset flows or liability flows with their cryptocurrency because it's instant. So they don't have a liquidity issue. Because it's instant, there's no outstanding flows. Whereas Bitcoin is not instant. They don't have the capacity to instantly settle. This is just ridiculous, seriously. This guy's an idiot. The thing is, with Ripple currency, you could use Ripple currency and still trade foreign currency. He's missing the point completely. Say, for example, I wanted to trade US yen, but I didn't want to use the SWIFT system. Okay? I want to use Ripple system for that. So what happens is Ripple is used as a conduit. Rather than going to the banks with the old SWIFT system, they use Ripple as the conduit. So I buy fiat, say I buy US dollars and I sell yen. What I do is I use Ripple as a settlement system. So I basically buy US against Ripple, and then I sell Ripple against the yen. And that's instant settlement. Rather than me going through the SWIFT system, where I have to go through other correspondent banks to deliver the currency that I sell. Let me give you another explanation. Say I'm in Australia and I have Aussie US dollars, and I send Aussie to a Middle Eastern bank. So I basically send Aussie. So I sell Aussie dollars to a Middle Eastern bank, or I'm sending it to my mother in the Middle East, for example. So say I'm sending Aussie dollars to my mother in the Middle East. In the Middle East, they can't accept Aussie dollars because they don't have an Aussie dollar Vostro account. In other words, the Middle Eastern bank doesn't have an Aussie dollar Vostro account. So what happens is I send my mother Aussie dollars, and I go to send it through my ANZ, for example, but they have to convert that to their own currency or the US. So whatever the Middle Eastern currency is, they have to convert the Aussie dollars I send to my mother in the Middle East in the Middle Eastern currency, okay? Because they can't receive the Aussie dollar because they don't have Aussie dollar accounts. So what happens is I tell NAB or my Australian bank I need to send Aussie dollars to the Middle Eastern bank for my mum. NAB take the money out of my account and they transact that Aussie dollars through the SWIFT. What they then need to do is, because this Middle Eastern bank does not take Aussie dollars, they need to find a correspondent bank on behalf of the Middle Eastern bank that will take Aussie dollars. So they find a bank in between, like Hong Kong or something, who can take the Aussie dollars and has an account with the Middle Eastern bank who can only take US or whatever their currency is. So the intimate bank, the correspondent bank, is Hong Kong Bank, who can take the Aussie dollars, even though NAB is dealing with the Middle Eastern bank. The Hong Kong Bank acts as a correspondent to take the Aussie dollars and then has a connection in the Middle East somewhere where they have an account where they can convert the Aussie dollars to Middle Eastern whatever it is, and that third bank then has a connection with the Middle Eastern bank where my mother has an account. So what you have is 4 banks in the process. You have the bank, I've gone to my bank. NAB, I've given the Aussie dollars and I want to send it to my mother in the Middle East. NAB don't have a direct link with the Middle Eastern bank, but they need to find someone where they've got limits with who has connections with the Middle East. So they use Hong Kong Bank, for example. Hong Kong Bank does have a Middle Eastern bank, but it's not the Middle Eastern bank that my mother banks at. So Hong Kong Bank go to the Middle Eastern bank that they have a connection with, they convert the Aussie dollars to the Middle Eastern currency, and then that Middle Eastern bank will then send that Middle Eastern currency to the Middle Eastern bank where my mother banks. Now, in that situation, it would take 10 business days to do that. If you were using Ripple technology rather than SWIFT, Ripple would act as the conduit. In other words, I have Aussie dollars. It has to be converted to the Middle Eastern currency because the Middle Eastern bank cannot take Aussie dollars, and it needs to go to my mother at Middle Eastern bank, number one, say. So Ripple would be the conduit. What Ripple would do is basically the Aussie dollars, if someone's using Ripple's technology, the Aussie dollar goes through Ripple's technology system, Aussie dollar against Ripple, XRP, and then the conduit is Ripple again, XRP, buying the Middle Eastern currency directly with the Middle Eastern bank where my mother banks. And that is it. And that is instant settlement. Whereas on the other side, if you're using the old SWIFT technology, you've had to go through 4 banks and correspondent banks, and you've had settlement people on every level confirming transactions. And this is why it takes 10 business days. It is a nightmare. Right. And then this guy goes on and talks about Bitcoin futures trading and says that, Ripple cannot become the global reserve. I mean, again, we're talking about 3 different things here. Bitcoin futures trading has got nothing to do with Ripple's ability to settle transactions, foreign currency transactions or whatever, instantly. It's got nothing to do with the liquidity of Ripple. It's got nothing to do with the pricing of Ripple, honestly. Futures contracts are completely different to cryptocurrency, and they don't provide liquidity in terms of funding. I mean, seriously, this guy, futures are completely different to foreign exchange and cryptocurrency. They're a different asset class. They're derivatives. They're not cash flow. Foreign currency is cash flow. You're buying Aussie to sell US dollars. It's physical cash flow. Futures are not physical cash flow. This guy has got no idea, and I'm getting frustrated. Then he's talking about the custodian thing. For large one, the single largest problem with crypto, other than custodians, is price volatility. Yes, there is price volatility within cryptocurrency, and you can use futures to hedge the price risk. Well, no, you can't, because Ripple's price risk is going to be completely different to Bitcoin's price risk. It's not one for one. It could be the opposite. Ripple could go up and Bitcoin could go down. A hedge assumes that it's one for one. It operates the same. In other words, I use the futures because it's going to act exactly like the physical, meaning the physical Bitcoin cryptocurrency. But it's not true. Bitcoin can trade differently, it can go up or down, and Ripple can trade differently up or down, depending on what news has been, what comes out. Okay, so you can't use Bitcoin futures to hedge Ripple. You've got basis risk, which means they're not the same. They are different cryptocurrencies. They are not the same. I mean, this guy's using a couple of terms because he thinks he's a real smarty, but he's got no idea. Seriously. The banks will never hold Bitcoin, ever. Apart from that, Basel II and, the legislators would never allow the banks to hold Bitcoin. We're talking about Ripple that can settle instantly, and Ripple that, can save them massive amounts of costs. The banks will never be able to hold Bitcoin. There's just no way in terms of compliance or anything else. I mean, this guy's got no idea. Bitcoin, the cryptocurrency, doesn't have liquidity. It doesn't because it takes a long time to do anything. Liquid markets are when you can transact something instantly and get out in the, straight away. In terms of the price risk, it's not a liquid market, Bitcoin. Not at all. And the futures markets is a different story. It's not a physical cash flow market at all. This is all crap. Pumping. This guy's got no idea. Seriously, no idea. Sorry it took so long, but this is frustrating me. Bearish, good on him. Tell it, I wouldn't want to short Ripple. It's the only technology out there that can instantly settle anything instantly. And if the banks use the cryptocurrency itself, you can basically reduce their cost by another 30%. This guy's an absolute idiot. Let him short Ripple because he's gonna lose himself a shitload of money. Cheers, guys. Sorry for taking so long.